Angan Guha, MD and CEO of Birlasoft, now joins in. Morning, Mr. Guha. I guess you've got this quite a bit since you posted your numbers. It's been a pretty good quarter on the face of it, and you've largely outperformed the industry, internal expectations. Lay it out for us. Tell us how it's been, and of course, looking ahead as well in terms of guiding us in terms of revenue. How does that look?
Thank you for having me on the show, and good morning. So look, we've had a good quarter. I mean, it's a seasonally weak quarter, as we all know, but even then, I think we've executed very well. As you know, our revenue numbers are up almost 2% quarter on quarter. I mean, rupee terms, 2.5%, and in rupee terms, almost 10% year on year. So from that perspective, I think it's been a very solid performance. But I think even the bigger performance for us has been our earnings growth. Our PAT has crossed 150 crores for the first time in our history, and we are pretty proud of that.
Right. Let's talk about vertical breakdowns. BFSI, manufacturing, I know has done quite well. 2 quarters ago, you talked about how life sciences would be seeing a pickup. Are those expectations playing out as planned or expected in that sense?
Yes, clearly. I mean, like you pointed out, our manufacturing business is very strong. It has done well. Our life sciences business has bottomed out. It's turned the corner, and we are seeing growth in that. Our financial services business, because of the furloughs quarter, is seeing a little bit of a dip. But I'm not very worried about that. I'm sure the financial services business will also pick up starting Q4. So all in all, it's a broad-based growth as far as we are concerned. And I think the team has done a good job in execution, which clearly shows up in our numbers.
Mr. Guha, what happens going ahead? Do you expect the same verticals to continue to contribute to your top line? Are you betting big on other verticals that would pull through? Just guide us and help us understand what the industry dynamics really look like, and where are you really seeing inquiries, conversations, deal signing?
Yeah, so the markets are still very volatile. I mean, it is hard to comment in terms of how the economy is going to move going forward. I don't think the economy has changed, and the macroeconomic situation has not changed too much in the markets that we serve. So we'll have to wait and watch there. From a verticals perspective, as I had stated earlier, we'll be focused on the 4 verticals that I had called out, which is financial services, manufacturing, healthcare, etc. So I think we'll be focused on those verticals. Our energy utilities vertical is also showing significant growth. So I'm pretty confident that the current 4 verticals that we have called out, just by focusing on them and focusing on key markets, we can sustain the growth.
What about margins, Mr. Guha? You had guided a couple of quarters ago saying that, you would see a good run rate of EBITDA margins at 16%. And you've managed to do that despite salary hikes that have been undertaken, incentive payouts. You think 16 is a good number, and is that the number internally as well, or do you think margins could push further from these levels, at least in terms of internal objectives that the company has?
Look, our objective is always to kind of invest in our business because one is the quarter-on-quarter performance, which is important, but equally we are investing for the long term. And we've got a lot to do when it comes to our domain, creating technology capabilities, entering new markets. So it is going to be the next 2, 3, 4 years is going to be a lot of investment in the business. So we want to keep our margins in a narrow band. Now, obviously, we do not give guidance in terms of how our margins or revenues will move. We will be focused and take 1 quarter at a time and keep executing for that quarter. But our investments will continue.
But fair to assume, Mr. Guha, that 16, is a sort of good ballpark where you would be trying to deliver at?
I think so, in the sense that, again, it's a little difficult question because it is a manifestation of the kind of orders we pick up, the markets we serve, the macroeconomic situation. But, our endeavor would be to keep the margin at a very, very narrow band while we continue to invest. See, we are looking at a lot of investments going forward to build a long-term sustainable business, and that's important for us.
And that brings me to your next question. What is it looking like on the demand side? What's the time that you're spending on your business cycle, closures? From a decision standpoint, are things slow? And if they are slow, what are you doing to negate it?
So it is slow. I mean, it's like I said a little while ago, I don't think there is too much amount of change in the macroeconomic environment, and we'll have to kind of see how things pan out. But our pipeline is improving, which is obviously a good news. We've had, good order signings over the last 9 months. If you look at our 9 months number, it is almost 10% higher than the corresponding 9 months a year ago. So that's a positive sign. So look, we are cautiously optimistic, and we are working with our clients in the transformation journey. I'm confident that we will continue to execute well for our clients. But it is obviously a little hard to say in terms of exactly what number we deliver in signings in 4Q or beyond. But we are feeling a little bit more cautiously optimistic as we go forward.
Talking about geographies, US clearly has been a little bit of a pain point, no clarity. While some are calling it green shoots, others are saying it's non-committal in terms of on-ground activity. I did look at a couple of interviews you did where you said that you would be also looking at other geographies. In fact, your CFO has also talked about that. What's the plan there? What sort of geographies are you focusing on? Investments are being made in new geographies as well.
Yeah, so first of all, let me comment on the US. The US is a big business for us. As you know, it contributes 86% of our revenues, and we will continue to be invested in the US. I mean, it will deliver industry-leading growth for us. We are feeling more and more confident of serving clients in the North American region. But equally, we want to diversify our revenue base, which is why we've hired a CEO for the rest of the world who's going to manage all geographies outside the Americas. He's going to be based in London. So, under his leadership, we will be investing in people, we'll be investing in markets. Now, it's a little too early for us to say which markets we will be focused on. But we're committed to all geographies that we work in and where we serve our customers. And we want to definitely broad base our growth.
Right. I mean, everything on every front, I think there's been a beat. Even your attrition has come down significantly from the second quarter level of 18% to now 12.6. So clearly, first quarter rather, steps in the right direction. You want to quickly comment on attrition for me, Mr. Guha? And also, I mean, tough to find a sore point apart from the fact that the macros may not be very supportive at this time. But anything that you're concerned about as you run this company, I'm sure there are things that keep you awake at night that, we'd like to know just to be a little more mindful when we view these numbers.
Yeah, look, the last 4 quarters has been incredible for us. I mean, we've delivered on all parameters, like you've noted. But look, the job is yet half done. We've got to invest in a lot more areas, like I talked about, whether it's domain, whether it's technology, whether it's newer markets. But we're quite excited with the possibility that the market presents to us. The attrition again is currently at the lowest levels it's ever been. I think the attrition will continue at the current levels for at least a couple of quarters till the markets turn. I think the team has done a good job on all the people's policies. I mean, we've promoted people. We have given a wage hike. We are investing in our people. We are investing in training. So by and large, I think we are on the right track. But look, we don't know what we don't know. We don't know what the future holds. But our job will be to take one quarter at a time and execute for that quarter.
But you are feeling optimistic at this stage, right?
Well, let me say I'm feeling cautiously optimistic. I mean, optimistic is a very tough word in today's market, but cautiously optimistic, definitely.